Today in this video, we're going to talk about how do lenders verify your income when it comes to qualifying for a mortgage. Check it out. Hi, I'm Rhonda Burgess. I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. Okay, we are going to continue down this vein because we're going to get y'all credit worthy. We're going to get y'all credit ready. So when you do, make your move to get your property, you're going to be good to go, and it'll be a seamless process. So let's talk about income. In one of the other videos, I talked about how the underwriting is still very much behind the times because it assumes that everyone is, for the most part, still working a W-2 job. Okay, so let's talk about you W-2 earners. I'm talking about my hourly people. When you're paid hourly, let's say you make $10 an hour. We're going to take $10 an hour, and then we're going to look at your check stub because we do not automatically assume that you're working 40 hours. You may work a PRN schedule or you may work 312s or, any type of variation. So what we're going to do is we're going to take your average of your working hours. So if you're averaging, once we take your check stubs, I normally like to look at 2 months worth of check stubs. Whether you're paid weekly, bi-weekly, semi-monthly, whatever. I want to see 2 months worth of check stubs. Your most recent 2 months, because that normally shows me how often you're working and how many hours you're working. So we're going to take that, we're going to average that out. So if it averages out to 40, that's cool. If it averages out to 36, that's cool. Okay. And I'm just talking about your straight hours. I'm not talking about overtime yet. Okay. So let's say you are working 40 hours a week and you're at $10 an hour. So I'm going to take 40 times 10 is 400. That gives you 400 a week times 52 weeks. And then we're going to divide it by 12. That is your gross monthly income. Okay. And that's just your base. Now, if you work overtime, we're going to get it. We're back to that 2-year average. If you've been on that job and you normally get overtime, let's say you normally get 10 hours of overtime a week, we have to see that consistently before we can count that overtime. And it's not like, how sometimes, especially a lot of businesses only become profitable in the fourth quarter of the year. Around your Black Friday, your Christmas, the end of the year type stuff. So if you work overtime during just the last 3 months of the year, it's not going to be counted. It's just not going to be counted. You have to consistently be working overtime for overtime to count. So you need to have a history of receiving that overtime. Okay? Whether it's automatically built into your schedule or you volunteer every week. So if you get bonus, let's say you get a quarterly bonus. That's cool. That's fine. Maybe it's because your bonus is based on how your store performs or how your department performs or whatever. That's much easier to calculate. Okay? Because we can go back again and see, do you have a history of receiving that bonus? Even if you don't, let's say 1 quarter you miss it, right? But you've got the other 3 quarters of the year where you got the bonus, that can be counted. But if you only bonus every so often or every blue moon, it's not going to be counted. Now that money will count for you as far as, your reserves, your down payment, but it's not going to count as your monthly income. So it's not going to help your debt to income because your debt to income, remember, is based off of your monthly income. Remember, when you're looking at your gig economy and you're doing the apps and stuff, that is self-employment. That is self-employment. That is totally separate. So let me finish with my W-2, my straight hourly people. So that's how we're going to count your stuff. The bonus has to be consistent for it to be counted. The overtime has to be consistent for it to be counted. Now, let's go into the self-employed people. Again, your commission people. Again, they want to see a 2-year history. A 2-year history. The credit game believes that if you've been doing something for 2 years, if you've been doing it for 24 months, more than likely it will continue, and you have established a history of doing that job, right? So it wasn't like you just did it for the Christmas season to get some Christmas money, right? You actually do this all the time, okay? So again, on your commission sales, if you are just in commission sales, we need to see 2 years history. And you need to have filed taxes on that money for 2 years. So when I say that, I know, listen, I've been self-employed as long as I've been employed by an employer. I've been self-employed longer than that. You cannot, if you want to buy a house, you cannot write off your income for 2 years. Let me say it again. And let me say this. I know it ain't fair. I know it sucks. I'm just telling you this is what the rules are. If you are wanting to do anything financial wise and you are self-employed, or you have part of your income is self-employment with the apps or whatever you're doing, any 1099 type activity, do not write off that income for 2 years. Pay taxes on it. That's the only way we can count it. So, let's say you made $50,000 doing whatever you do in your self-employment, right? And I know when it comes down to the end of the year, you getting all your receipts together, you finna write off all your materials, you finna write off all your supplies, you finna write off mileage, okay? You finna write it all off, because we want to bring that 50,000 down low to like 10,000, 20,000, so that we're paying taxes on the 10 or 20,000 instead of up here at the 50,000. If you do that, you're not going to qualify, because you're saying once you write everything off, you only made $10,000 for the year. $10,000 divided by 12 months, that's less than $1,000 a month. That's what you're saying your income is. You've got to not write everything off, and you've got to pay the taxes for 2 years. Again, I don't make the rules. I'm just telling y'all what it is. So then this is another reason why I say you can't just wake up today and say you're going to buy a house today, because you really should have started working on this at least 2 years ago. If you are self-employed and or you do 1099 gigs on the side and you need that money in order to qualify. Now, if you don't need that money, if you don't need that income from DoorDash or driving for Uber or Lyft or Instacart or whatever, I want y'all to hear what I'm saying with the, if you're doing the gig economy, that's cool. If you don't need it in order to qualify, then go ahead and write it off. But you got to make sure that you got enough income otherwise to qualify. Don't make this mistake of you like, okay, well, I'm only going to show I made 24,000 for the year. And let's say you had, 30,000 worth of expenses that you writing off. Okay. And so you showing that your adjusted gross income, your AGI on the front page of that 1040 form. I'm talking about federal. I'm talking about the IRS. If you're only showing 24,000 as your adjusted gross income, then that's only 2,000 a month. You're not going to qualify. Be cognizant of this before you get started. Again, if you don't need that money, if that's just side money, and you have another job, you have a W-2 job where you have documented income where you can qualify, then use that. But otherwise, you cannot write off your business expenses for 2 years. You need to file the full income, and you need to pay the income taxes on that income. I know it sucks. I know. Trust me. There were several years that I owed the IRS when I was self-employed. I'm telling you, when I had my mortgage company, and I had the real estate company, and I had 11 loan officers at one time. When I tell you, I used to, my payroll sometime would be 6 figures a month, okay, just to pay them where we was doing so much. And so you can imagine how much I owed the IRS. So just know, and if you do, when you do owe the IRS and you do not have the money to pay the IRS, you can make a payment arrangement. Make a payment arrangement with the IRS. And we can include that payment. What you have to do is you have to enter into a payment agreement with the IRS. They have to agree to it. Then what you're going to need to do, you need to make it the first 3 payments. No, you cannot make them all at one time in a lump sum. No, no, no. We want to see that you have made those payments, that you have kept up your agreement that you entered into with the IRS. Okay. So you're going to need to make at least the first 3 payments. So let's say you owe $5,000 in taxes. You make an agreement with the IRS that you're going to pay $250 a month. And so they send you back the paper where they agree, you both agreed. Okay, we're going to need that paper where you have agreed to that payment arrangement and the IRS has agreed to it. And then we need to see proof that you have made those first 3 payments. So see, you're at least 90 days out once you even make the agreement. You've got to make those payments. We've got to see, and then we're going to want to see proof that you've made the payments. You're going to need to go into your IRS account and show where the payments have been received. You're going to need to show where they came out of your bank account. And then we'll be like, okay, cool. The underwriting model says that qualifies. So just because you owe the IRS doesn't mean that you can't buy a house. You just have to make an arrangement to pay the IRS, and you've got to show that you are legit with that arrangement and that you are making those payments. Because then once we see the 3 months that you've made the 3 months of payments, then we will just include that amount in your debt to income and you can still purchase. But just know, this is how we count income. My self-employed people, think about it. Do your numbers, do your calculations beforehand. If you have a day job and you're just doing the gig economy on the side for extra money, then you may want to look at your numbers and see if you can qualify without having to report all of that income. With that, what I mean is, can you qualify on just your day job so you can still write off your side hustle money? Okay. And that's the same thing for like anybody who's self-employed. Maybe you do hair. Maybe you bake cakes. Whatever it is that you're doing, when you're self-employed, just know you got to show that 2-year history. And back to my W-2 people, we check with, like how when we do verifications of employment, we verify your employment. A lot of places for the W-2 people, it goes through the work number. Y'all know the work number. A lot of places now go through that. So don't think that you're going to bring in doctored up W-2s and check stubs to your originator, trying to prove that you make some other type of money, another amount of money. It's double, triple verified, because if we have to go through the work number, we get it from there. And the work number a lot of times tells the income, tells how much you're making. Okay. If your firm, if whoever you're working for is using a work number, it tells everything. There's no getting around that because it's pulled directly from their payroll records. Also, I've had people try to bring in these homemade W-2s. We verify. We go get your tax transcript from the IRS so that we know how much your employer reported. There's really no way of getting around this. You can doctor up stuff all you want to. I'm going to tell you another way. Well, me personally, I used to catch people like this all the time. If you bring me in a fake check stub and you want to say you're making $1,500 a week, I want to see whatever bank accounts or pay card where your net pay is deposited. Let me say that again. I want to see, if you're telling me, let's say you really make $750 a week, but you're gonna bring in a check stub to say you make $1250 a week. Okay. And you think we're supposed to do with this? Go with it. First of all, if your employer does not use the work number, I'm getting ready to do a verification of employment myself. I'm calling HR, or my processor's calling HR. Your ABC company, okay, hey, this is Rhonda with ABC Mortgage Company. I'm trying to do a verification on Jane Doe. You know, if I can't get it over the phone, a lot of times we do email, because we have you as a consumer fill out an authorization form that says we can talk to your employer, we can talk to this person, we can pull credit, we can do all of this. Okay, so we'll email over the authorization form and the verification of employment. Somebody's got to sign it and sign their name. And then a lot of times, this is just one thing that I do. If my processor does it, I call again later on. It won't be the same day. It may be another week into this file. Because see, if you just apply, you may be thinking, okay, you may be calculating. Okay, the file just got there, blah, blah, blah. So I'm going to get Susie over in HR to answer the phone this day. Or I'm going to be the one to answer the phone when they call. Because when I tell you I've seen this stuff. So you running game because you thinking, okay, if you verify, or you'll get your homegirl friend them to verify, then it's going to be cool. No, I call and do another verification. We also do another verification of employment before you close. So don't think that, okay, I'm going to stay here until I'm good to go. So then you get to clear to close, right? And then you quit. I'm just telling y'all stuff that this really has happened. You quit on Tuesday and you supposed to close on Friday, but we call on Thursday to verify that you still work there. Sometimes we call the day of closing. I've called the day of closing while you sitting at the closing table. Sometimes you just don't, sometimes we get this really, really weird vibe sometimes. And so maybe the closing department won't release documents until they do that last verification of employment. That's another thing. You can't be on leave. You cannot be on leave. I don't care if it's maternity leave or not. You cannot be on leave. You have to be in a current pay status, meaning you have to be actively working and actively getting a check. We don't want to do you while you on leave. Who said you coming back? You know what I mean? And that could be maternity leave. That could be short-term, long-term disability, whatever it is. You need to be in a current working and pay status. So there's a lot of times that we going to call and verify on you that you don't even know about. You know what I'm saying? So don't think that you're going to be slick with the money. Tell what it is. And a lot of times now we got all of these ways to verify you. We got Plaid. I don't know if y'all have ever tried to buy some stuff online or whatever, and they want a link to your bank account. You know what I'm saying? Whoever you bank with, Bank of America, Regions, all of them in there. All the banks is in there, right? And then you have to give Plaid the okay so we can see your bank statements, so we can see what's going on. That's why I said I'm going to want to see where your money is being deposited at. Because I'm looking. Because if you're telling me you're getting $12.50 a week and I only see $600 being deposited, then I'm going back to the paycheck stub because I need to see the paycheck stub because you got a whole bunch of deductions coming out then. You got a whole bunch of deductions coming out if only $600 is being deposited and you're making $12.50 a week. You see what I'm saying? Because if you're making the $7.50 a week, the $600 deposit would make more sense. You see what I mean? So don't think that you're going to get around it. Just tell what it is. And you got to do your homework ahead of time so that you will be credit worthy. But just know that we're going to double check if you're working and your income several times before you even get to closing. And that's even for my self-employed people. Let's say you do car sales. We're going to call up there and see if you're still there. We're going to see if you're still there. If you're running your own business, honey, we finna go all through Google. See if you still your stuff is still online. Is your website still up? Is the phone number still where? Is everything legit? You got to, because the income has got to be in line to make your debt to income work to even get your approval in the first place. But these are just some of the things you need to know about how we calculate income and how we verify your employment or that income that you say that you have coming in.